All right, moving on, the rupee has now breached the 96 per dollar mark for the first time ever on Friday. And while the currency remains under pressure, Amit Babri, founder and MD of CR Forex, believes that it will not drop below $100 in the near future. Let's listen to this.
So probably Indian government and RBI both have acknowledged the problem that rupee is weakening at a higher pace as compared to other emerging market currencies. So we think that RBI and government will take steps, and because of those steps, rupee might not move towards 100 in near couple of months' time.
Now, for the Indian currency, the larger headline is still global. There is no clarity on the U.S.-Sudan war or Hormuz. As a result, Brent crude is climbing back towards $110 per barrel. The market uncertainty persists over the success of future peace talks and the fact that the Strait of Hormuz remains effectively closed. Well, for India, this is critical. Higher oil prices directly increase India's import bill, leading to higher dollar demand and a weaker rupee. Now, strong U.S. data with a twist has added another layer to the rupee story. Expectations of higher inflation and delayed rate cuts or even hikes in the U.S. has supported the dollar, which in turn adds pressure on the rupee. China is adding another layer to the rupee story. In many ways, China is positioning itself as a stable growth engine at a time when the rest of the world is dealing with uncertainty. And this makes China attractive for global investors. As more money flows into China, the yuan strengthens. And at the same time, some of that capital shifts away from markets like India, reducing support for the rupee. And there's also a secondary impact. Stronger Chinese demand pushes global commodity prices higher. For India, this means a bigger import bill and higher dollar demand. The foreign investors are not helping either. Outflows of 19,152 crore rupees in early April after 60,655 crore rupees in March. It shows a clear trend. When international investors pull money out, dollars are bought and rupees are sold, which weakens the currency. In simple terms, less foreign money coming in means less support for the rupee, especially at a time when global pressures are already high. The Babri also explains how the Indian government and RBI can keep the Indian rupee from weakening any further.
There can be a couple of measures. The first measure can be they can introduce FCNR bond or NRI bond, where the flows of money from western part of India to India can come. And second step, what they can do is that they can improve the taxation of FIIs on equity market and debt market. In last couple of months, FII have sold close to $22 billion in Indian equity and debt market. So any improvement with respect to taxation rule can increase the flow from the west to the east. Third important step, what they can take is curbing imports like gold and silver. Basically, they have taken steps towards curbing of gold and silver demand.